move on to the co-panelist here, Gaurav. Christ alumni, and then going to Harvard, and then setting up a company. Probably quickly onto your journey, and maybe did you have 85% attendance?
I can for sure tell you my attendance was south of 60%. I was always the one, all the BCom classes, I don't know if they still do this, but they have two doors, right? One at the front, one at the back. I was always the one who stood at the last bench, used to give proxy and used to exit, so. I'm sorry, professors, for saying this here right now.
I think Christ is also using tech to monitor that now.
Back then there was nothing, so, but it brings back a lot of memories, and thank you for having me here. Thank you, Christ University, for having us here. My journey started not very different from Nitin's. 2004, I graduated from here with difficulty. I used to play basketball for the college team as well. And I spent most of my time at the cafe next to the commerce classrooms. I hope they still have those amazing egg puffs. But post-graduating 2004, I joined my family business, which was into manufacturing of garments and apparel. So I was never a finance guy, I never understood finance. I spent the next 4 years on the factory shop floor, understanding how to manufacture garments and understanding how to kind of export them. And we used to export garments for guys like Nike, Gap, Abercrombie, and a bunch of others. But one thing always bugged me is, through the 4 years that I worked there, I could never get a credit card. I applied at every bank and nobody would give me a credit card. I could get a credit card as a supplementary one for my father, who's obviously had much larger income, etc. I was working in a family business, not much income, right? So no bank would actually give me a credit card, even though I had a salary. It was a small salary, but nobody would actually give me a credit card, and this always plagued me. Anyway, I didn't do much about it then. I had the privilege of then, the family selling the business to Blackstone in 2010, which is when I exited the family business and went to Stanford for my MBA, where I met my co-founder Shashank. Long story short, two of us were very excited to come back to India, start something in tech. Just like Nitin, we were not engineers ourselves. We don't know how to write code. I can barely do Excel also. But the thought and the idea of always starting something in tech was very exciting, because having spent time in Silicon Valley, you get very motivated by the innovation that's happening there. So 2013, both of us returned to India. And after evaluating many ideas, Fintech was always one of them, because of the same credit card problem that I always had. And my goal was to, how do we actually end up solving that problem? And unfortunately, no matter the amount of success a lot of companies have had in this space, the problem still remains in India, but that's exciting. So today we have about 500, 600 million people in the country who have a bank account, but there are only 30 million people today in this country who have a credit card. And that's the problem that we are still trying to solve. And that gap still excites us. The second thing that really excites us at Fintech, and Nitin touched upon this, is over the last 3 to 4 years, there has been a lot of digital infrastructure that the country has developed. Right now, India may be a little lacking in terms of physical infrastructure, but our digital infrastructure started obviously in terms of geo, in terms of internet penetration, number of mobile phones. But what is uniquely called the India stack, where you have UPI, I'm sure a lot of people here use UPI. You have Aadhaar, which makes taking of a loan and taking of credit much easier. And you have a lot of data today. We've got the bureau, which any person taking a loan today has a footprint and data on the bureau. There are about 300 million Indians today who are taking some loan in some shape or form, and that data is available on the bureau. Right? All these factors have actually allowed us to build a company that today can give credit in under 3 seconds. So today, if you're shopping online on an Amazon or a Make My Trip or on any of these large platforms, you will see an option to do buy now, pay later, which is buy your product now and pay for it in 3 installments, and therefore actually availing credit. So it's something like a credit card, and under 3 seconds, we are able to tell you whether you are approved for a loan and you actually get that loan and actually you can use it. So gone are the days when you were looking for that 10, 15, 20,000 rupee mobile phone. You couldn't afford it because you didn't have the funds right there, right now. But obviously in lending, keeping the NPAs and keeping the credit risk is most important. So we've had to learn that in sometimes a hard way. And having seen many cycles in India over the last 5 to 6 years across demonetization, GST, COVID, we've had to become masters at how we underwrite, how we evaluate risk, and also how we do kind of collections. And the third piece that really excites us today is, fintech in some ways is basically unbundling what a bank does. And so while Nitin does one piece of it, we do one piece of it. There are startups that are doing every piece that a bank does, from payments to lending to savings. And each one of them are doing it with amazing tech, amazing customer experience. But none of us can live today without the bank. Almost every fintech relies on banks. And the partnership that today banks and fintechs have in this country is actually solving a unique problem where a lot of the fintechs bring in the customer experience, bring in the user journeys, but the banks bring in the infrastructure, the cost of capital, the regulatory frameworks. And so that is the third piece that I think is making it very exciting to be doing fintech in India. Today at AXIO, we have about 8 million customers who are availing credit. I don't know if anyone uses Amazon Pay Later here. If anyone does, yes, I can see a few hands. It is credit. That is our product. So please keep using it and please keep repaying the money back as well. But like that, there are similar products, and most of our 8 million customers are aged between 22 to about 35. So younger folks who typically don't get serviced by the formal financial institutions, and we provide that credit in a hopefully very seamless, efficient manner. And the goal is, how do we take this 8 million to at least 30, 40 million over the next 3 to 4 years and keep scaling the business from there on. Thanks.
Lovely, thank you.